Hey friends, today I wanted to spend some time on the market turmoil we're seeing in June 2022. I will touch on the cause, what the Fed is doing, home values, recession, mortgage rates, and whether or not it's a good time to buy a home right now. So there's definitely some turmoil out there, and that unknown can create fear. I have worked in this industry for 20 years. I've seen 3 similar cycles where fear starts to take over and the media makes it worse. So it's important to not overreact or act out of fear because this too shall pass. I remember speaking to clients in 2008 who cashed out their 401k because the market had moved lower. And then by doing that, of course, completely missed the upside in the market, which would have tripled or quadrupled their retirement savings. Also in 2008, the government had to bribe homebuyers with an $8,000 tax credit to urge them to buy a home because everyone was so scared to buy because values had moved lower. The ones that bought, well, they're sitting on $500,000 of equity today in that home. So what's the cause of this turmoil? The inflation numbers came out recently and it showed year-over-year inflation at 8.6%. This shocked the markets. Inflation is the arch enemy of bonds, so within 48 business hours of that report, we saw interest rates move up 0.5 to 0.75%, cross above 6% for the first time in 15 years. The media, who's usually a week or so behind on this type of news, has not even picked up on this move yet. Yes, rates are higher, but they will eventually level off, and down the road with a recession, we'll see them drop lower again. Will we ever see 2 and 3% mortgage rates that we saw during the COVID time? Not sure, but I know for me personally, I hope we only get one pandemic per lifetime. So what's the Fed doing? The Fed's primary job right now is to tame this inflation. The only tool they have to do this is to raise interest rates. This week, we saw another 0.75% rate hike in their most recent meeting. The Fed missed the mark on inflation last year, kept rates too low for too long in 2021, denied that inflation was real, and now they're having to act forcefully to control it. They will continue to raise rates this year to achieve this goal, but it's important to know that the Fed does not control mortgage rates. Will home values fall? Well, I'm not a realtor, and you should definitely consult your trusted realtor for their opinion on this, but here's my 2 cents. Even with rates going from 3% to 6%, we will not see a housing bubble burst like we did during the mortgage meltdown of 2008. That was caused by toxic, no documentation, no down payment mortgages that were defaulting and foreclosures spiking. Those loans were not being offered, have not been offered for the last 10 years. Even after COVID and the forbearance period that a lot of Americans went through, foreclosures today are at 0.2% of households, a number that is a record low for decades. Even with rates moving higher, there's too much demand and not enough supply for home prices to fall significantly. There's over 30 million millennials who do not own a home. The new home builders, new home construction out there are building about 2 million homes per year. COVID made remote work a possibility, and we live in a desirable state to live in, so values will be supported. With rates moving higher, demand certainly will fall a bit, and I've seen that people who were maybe moving here decided to move to a different state, some people just completely being priced out of this market. A drop in demand was needed because what we saw last year in the first half of 2022, the wild bidding up of prices, that's not sustainable. You cannot have a home go up 20% a year. The historical appreciation average for Colorado is about 4% a year. That being said, the supply will not increase to a level where I see problems because a lot of people love their homes, they have 3% 30-year fixed rates, and they have no reason to move. What about a recession? In the US, when the Fed goes on rate hiking cycles like they're doing now, in almost every single case, we are in a recession within 12 months. During that recession, we typically see interest rates move lower. What about home values? Except for 2008's recession, which again was created by the implosion of bad mortgages that were done previously, other recessions show that home values really remain stable or increase during a recession. So what's going on out there today? With the cost of borrowing going up, most buyers are thinking more carefully about their offers. And over the last month, I've heard of less offers on homes and seeing buyers able to buy a home at the list price or maybe even negotiate a little lower price. This is nothing more than a market coming to equilibrium. It will take some time for buyers and sellers to realize the shift in the market. There's no need for fear, even though we all know that the media is going to try really hard with their sensationalized headlines to make us scared about the market. Sellers who are coming to market now will need to realize that it's not March, and they are not going to get 30 offers for $100,000 over what they listed the home for. But that realization will also take some time, so you'll see some price reductions along the way. For people who listed now and didn't realize that the market had shifted, they're going to have to make some adjustments on those prices. All the videos you saw online from your favorite realtor posting in 2021, 2022 about what a great time it was to be a seller, they were right. It's still a great time. There's still way more demand than supply, but expectations need to be grounded in reality. Homes and borrowing for homes is just more expensive. Now, if you're a buyer, you should be buying a home. There's no other way I would say that. You need to buy a home. Here's an example of what a great time it is to buy a home. If you wanted to buy a $500,000 home in March, you had to plan on offering $550,000 and having that extra $50,000 available in cash to cover any appraisal spread if the appraisal came in low. Now you can buy a $500,000 home for $500,000 and you don't need the extra $50,000 in cash for appraisal gap. This is huge. A first-time home buyer now can buy with $25,000, $30,000 instead of $75,000 to $100,000 because they don't have to cover that appraisal gap. Yes, rates are about 1% higher than they were in March, but the buyer is still going to have a lower payment today because of that lower purchase price. Also, super, super important. I cannot stress this enough. We have to remember that a home is forever and the loan is not. You can refinance the loan when rates drop, and they will. These things are always cyclical. Remember, when we see inflation come down, mortgage rates will come down also. If you or someone you know is wondering what it would be like to buy a home or just want to chat, please reach out to me. We can put together a plan. Have a great rest of your day. Bye-bye.